Here's a trade example. Today I was up like 1,500 in this account, and we're going to show you how it was done. So remember that we always want to be trading in the direction of the intermediate time frame with a shorter term entry or criteria there. So these trades are taking place around here in this range. What we see is a giant big spike up. We're going to go into that in a little bit more detail, but not only is that a spike up, but we also see multiple breaks of ranges. So we see down here, this is second entry short that got broken above. We see this is a macro high that got cleared and then retested. There's an initial trend reversal here. There's a big spike up there. All of those are indications that the shorts are out of position, especially when you see this giant spike up there. Now, when you see a giant spike up there, most people are looking to either take profits, like let's say you were long from here yesterday, you're trying to take profits up here, you've made, wow, that's like 1,000 points, so that's pretty good, the profit there. But it also means that the market is just going up and the sellers are no longer here. If we mark the macro high right here, and then we mark some of these initial break levels that we use for trend identification. We can see this is a second entry long, so we'll put a level there as well. We can see that the market has gone above that, cleared that. This does look like potentially a range overshoot return. So remember, there's always conflict in the market. We have potentially a range overshoot return here, but we have this, all of these short traders that are providing residual up pressure, and then this is an extreme push up there. So the trend is up, and until we get a short-term break, we must assume that the trend is up here. We also see, if we look just on a shorter term, go to a 1 minute chart, this is a open fair value gap, so also support there. You can take this fair value gap here. This is viable. I did not trade this. I was a little bit late to this party. But one of the things we can do is look at the value shift. So if we're assuming that the trend is up, or that this is a possible range overshoot return, this was the macro high here. The fact that we went above it and then above it again implies that this isn't like a super strong high. So that's maybe a problem there. If we take down to a shorter term entry, we can see that this is a value congestion area, this area here. The market goes below that, right? So then now we have, you think about the different time frames. We have big picture uptrend, this giant spike up. Everybody over here and to the left on this chart is underwater. We have a macro range here, so the market's bouncing between this, and the conflict is between this fair value gap over here and this here. You could have taken a reversal on the fair value gap. So point being, intermediate trend is up in the immediate direction, and we're in conflict with the resistance. So we want to be trading in the uptrend. You could have taken the fair value gap trade here. I did not enter that, but there is a viable entry here because there's a delta reversal on the 15-second. And then if I get rid of this for now, we can see that the trend up here, the value is lower, lower, accumulating lower. So we didn't actually get an entry on the value, but you could have bought potentially the congestion range here. I don't like that trade because based on this criteria, although we have a reversal here, this is potentially a reversal off the range overshoot return. So, if you're betting in the up direction, you still have a pretty good bet here, but it's against that range overshoot return, which is a problem. The other thing that we can do, which is one of the strongest simultaneous criteria, is when we have an intermediate trend that is in one direction, and then we have what looks like a short-term reversal, and then that reversal fails in the direction of the uptrend, you have a very profitable setup regardless of what criteria you're using there. So in this case, you have this uptrend, you have this failure here at the fair value gap, and the delta reversal you could have bought there. If you're really trying to trade up, you could have bought here and taken off towards the high, and that's a considerable amount of points. The strategy that I used though was, if we look at where's the failure here. If this is the range overshoot return and we're betting in the up direction, this right here after this congestion level inverts is your sell area. So this is the sell failure, where if this is the range overshoot return, this would have been where that would have continued down. So think again, big picture uptrend. So you can kind of imagine like little boxes. I should probably draw this out for you. I'm not going to do that for this video, even though that would make this a better YouTube video. I'm not doing it because I'm still engaged in the markets. But this is the value area here on the short-term time frame. And then once we break above that, this implies a failure of this and value has shifted again. So big picture uptrend, we're waiting for a reversal on the short term so that you have like bigger picture up, shorter up, and then we have up plus up, the direction is up, and then we enter here. Okay, this is now, kind of screwed that line up. This is now the buy area because it's a failed sell. You can see that the market gets bought here and then it just continues to trend in the upward direction. Now I made 1,500 or so in this account, but really holding this forever, essentially, when you have these, that's how you make bigger money, is just by holding these trends. When you have multiple trends in confluence, holding in that direction for longer swings is what makes real profits. We can also see that if we're in the direction of an uptrend and just betting on the direction of the uptrend, that we can kind of do whatever as long as the market's going up, we're making money here. So another entry that I had 2 entries where I scaled into this. If this is the range overshoot return, now that we have another push above this, this is now support. We have another push above this. That implies that this high is just not there. There's just no high there. So the people who are taking profits here are not pushing the market down. Nobody's coming in to reverse the trend. There's no failures on the shortest term time frame. So all we do is buy. We can then use, I'm going to clear this, look to see more entries. An ideal entry would have been this value congestion area here. But if we're looking to see where's the failed delta from the other puzzle piece that we use, it's right here. Failed delta, that's a buy. It kind of reverses there. It comes down to this. Okay, so maybe we have another trend reversal. Looking like some big sellers are coming in there. And what are we looking for? We're looking to trade in the direction of the longer term trend on the failure of the shorter term trend. And so what do we have here? The same setup that I identified before. This is value. We have a value break. Okay, an attempt to buy there, sell here. It cuts underneath it again. We shouldn't short. Why not? Because all of these shorter term traders are still trapped. Okay, so actually buying the high right here was a good move. If you see where the value reverses, we go up here. There's congestion in this value here. These trades are now weak. You can buy at this high. It's kind of scary. It is to buy these highs, but you buy here with a stop here, and then where's your profit target? Well, it's infinity, hypothetically, a multiple of your stop. The point being, this is another value reversal here. If this was going to reverse, there's a big, these are accumulated short traders. More trap shorts are coming in here in a market that's trending up. So we trade against them. We wait for it to fail. Another value reversal. This is a congestion area. We see a small reaction here, small reaction here. It goes above that. These traders are now trapped too. These traders are going to find out soon that their position is breaking. Buy here, and they get stopped. And then what happens? Well, same thing. Just buy the trend. Push up. There's trap delta here. Buying that trap delta was a successful entry. Could buy that right there. As the value starts to distribute itself higher, this becomes the buy range, and we see that the market is just running and running and running. And then we even see that as this plays out here, this is more trap delta here, and the market is attempting to hold that. This looks like it might reverse, but until it does reverse, this is actually a buy zone. A little bit problematic because of the value inversion here. So now we have a value inversion here. It's a quote-unquote buy zone. It's failing now. There's a fair value gap here. So if you were going to take this long, should you buy this at this point? Probably not. As you can see, it's coming down. You wait for, again, either a return to larger, longer value, or we wait for a failure inside of some other structure. Like this is the fair value gap here. It's a very short-term fair value gap. But once this digests this congestion up here, where all of this is, if you see the market then begin to reclaim this, buying on the other side of that for continuation might be the play. In these markets that are just going in one direction, whether they're going up or down, we'll go to a longer term time frame. Everything over here is a reason to sell this market. This is a reason to sell. This is a reason to sell. This is a 15-minute chart. There's so many reasons to sell this. Well, there's a inverted fair value gap right here. Okay, all of those. There's a congestion right here. All of those are reasons to sell, except this is where people get in trouble because they just continue to resell this, resell this, resell this without realizing that the market is actually reversing. Once this breaks above this, now we're clear of that. This is actually support. This push up here, this is actually support. This inverted fair value gap is now double inverted, and it's a longer term one. So this is like major support. As we clear that, these are long-term structures that are breaking, and then they're breaking. So long-term structures breaking mean the market's going that direction, and then we use shorter-term entries to position against that. Ideally, we're trading with the intermediate trend. So once we have big picture trend is going one direction, slightly shorter time frame trend is going another direction. Then when we get an inversion on the shortest term time frame, that's your entry point. So you have multiple confluent trends, and your probability goes way up, and you can actually extend your risk reward ratio in that dynamic considerably. That's how to make money. You do that consistently. This is a perfect textbook example. You could say, like, how do you trade this breakout? That's probably what I'll call the video. How do you trade the breakout? Well, that's how you trade it. In the direction of the intermediate trend, at intermediate support, which in this case was a fair value gap, with the break of the shortest term time frame. In this case, you have a delta inversion here, you have a reclaim of value here. After you get a second new high up here, you just start buying this and then just hold it in the direction of the trend. You have the same sort of thing here, reclaim of the high volume node or value, goes up here, just buy it, buy the value. Inversion, you see the market is stalling there. Little push here, stalling, expected, because these people who have established position here are now happy to get out for break even if they're being prudent. And so what's going to happen here? Is the market going to go up or down? We don't actually know. We just wait to see which direction, like that's the unknown variable of all this. We're trying to do math problems when we don't actually know the variables, and we can't solve for the variables. We just know that this is an area where it's likely to stall. Why? Because there's trapped traders. There's trapped traders here that were trying to buy this delta area. They were trying to buy this congestion area. It pushed down below that. Maybe they think it's a trend inversion, blah, blah, blah. Odds are it's going to slow down there. Could it reverse entirely? Yes. The major direction, though, the variables we do know is that the market's up. So now this is reclaimed this value area here, and you can see that it's just going to go up a little bit more. If it starts reclaiming this direction and this direction, that means something is broke, something has changed, and the underlying dynamic has changed. But in theory, you can just buy this here and continue the uptrend because this is now another failed short. Like those are the addition problems that we have. It's like we have failed shorts on the long term, successful longs on the intermediate, failed shorts on the short term, and so where's the direction? Up. Nothing's 100%. Could this reverse here? Yes, and then that changes the equation. So you're always positioning with proper risk reward relative to your account strength, but buying here for a move up here, that makes sense.